What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. We got some exciting news coming with Cybertruck stuff, and we also have some data dropping tomorrow, so certainly could be a day where we see the market move in a big way. I'm really anticipating seeing what happens. So the first thing we're going to do, well, first off, don't forget to, check out the description below. Find the link to the Discords where I'm hanging during trading hours. Also, other ways you can support the channel, like through the merchandise website where you can find Rawstocks merchandise. Also, the socials are in there if you want to find me and follow me on Twitter or Instagram or any of the other social media platforms. Also, we're pushing closer to 500 members, so we'll be giving away a Rawstocks t-shirt. Be watching out for that video to drop. Instructions on how to enter into the contest to potentially win a Rawstocks t-shirt will be in that video. So first thing we're going to look at on the charts today, we're going to look at today's silver bullet time macro, and we're going to look at the setup that formed in the silver bullet macro, where we had a really nice trade. Took it, called it out in the live trading rooms. We called it on the Rawstocks Discord. Also called it on the Traders Helping Traders Discord in real time, and it was a nice trade. Some traders got out on the early entry. Some traders rode it all the way to the symmetrical swing, but I'm going to show you what that looks like today. Okay, so the first thing we have is running into the 10. So the silver bullet macro is between 10 and 11 o'clock New York trading time. So early heading into the silver bullet macro, we have a deliver on liquidity. There's actually right at this price here, if you look over further back historically, there was a, I think, 1 hour peak of a candle. We ran right up to it. Okay, but we also delivered on the liquidity that was here. So it was a draw on liquidity to the upside or to the buy side, running into the silver bullet macro. Okay, then we saw a sell-off. Okay, then we saw a run back up into optimal trade entry, or between 62 and 70.5%. That's where this goes. And there was also a displacement candle or a sell side inefficiency, leaving a fair value gap here. So we ran back up into optimal trade entry, up into the fair value gap. Okay, and with the silver bullet, the minimum target is back to a previous low. So I have that marked off here with a measure where if you got into even just the middle of the fair value gap as your entry point and you ran it to the low, it was a $2.05 move on price. Now, if you held even further, because we use some other tools to determine, right? Minimum objective is running back to this low, but further objective, we're using our Fibonacci tool with the extension levels that I have set. They're the ICT extension levels, but we have our take profit 1, take profit 2, take profit 3 symmetrical swing, and we did end up seeing price run all the way down to symmetrical swing. So if you happen to catch that entry and you ran it all the way to symmetrical swing, it's a $5.45 move on the price. You would have held longer through the silver bullet time macro, but also we did take another previous low. So something I want to notice here is our standard deviation tool. I'm going to be doing a video on how to use the standard deviation tool very soon, but basically we're looking at this high or this lower high, this higher high. You use the standard deviation tool to grab those, and then it gives you your numbers as we have preset, and we're looking for between 5 and 10 standard deviations. So 5 standard deviations is here, which is above that low, so we're going to take that one off, and we're going to say at least 6.5 standard deviations, which would be at this low, or as much as 10 standard deviations, right? So we said early exit is this low. Next exit would be 10 standard deviations. So let's go ahead and measure that and see if you got entry there down to 10 standard deviations, which isn't as far as it went. $3.67 move on the stock, so it would have been nice on an options play. Or again, if you held all the way down to symmetrical swing, then congratulations, that went into the lunch hour. But we did see that symmetrical swing fully play out, and again, that was over a $5 move on the stock, which would have been, a really nice play on the options. So gonna go ahead and delete these. I've posted them in the Discords, and I've posted it on Twitter, so if you need to reference it later on, that's where those are at. I'm gonna take off those though, and then we're gonna look at some of the higher time frame charts. So let's go ahead and look at the daily chart. Okay, some of the things we were talking about yesterday, we're just going to look at the premium discount zone here. And some of the things we were talking about yesterday is that we had this descending resistance line. And something I also said was, are we going to potentially, because in after hours, which isn't shown on the daily chart, but in after hours trading, we were creeping over that line. I said, are we going to see that be a false breakout and then see price come back down? And it does appear that that's what happened so far, but it hasn't come back down so far that we've tested this breakout candle. We're just inside of it. We're actually just right below that resistance, also back to the previous week high. And so we haven't seen, anything more than just this false breakout. But that's only one day. We have Cybertruck news tomorrow. We certainly could see price run up a little bit. Let's put a couple levels on here of where price could go to. We do have that little high there in that wick that we have not quite got to. I'm going to call it 257. And then we have the previous month's high here, which was from October. We're almost in December now, but that's at 268.83. So we caught a couple different liquidity levels and then ultimately 278.68. Don't think we're getting there on this run, but we do see this wick as a fail to deliver on this liquidity. Then we came down. I do think we're going to possibly cycle back around to grab that 257 before we see maybe potentially a little bit bigger correction. But we'll be watching to see. I mean, it could just take that and head to the next level, then maybe come back down. But we also have some trend lines developing, and so we want to be watching those as well. We have the more aggressive trend line, which we have tested a couple different times. Did not get back there today. If we were to sell down early tomorrow before the news, we might look at hitting that trend line somewhere around the 240, and then maybe seeing a rally on the Cybertruck news or on some of the other data. But we also could see that early rally come up and swipe that 256, 257 level, and then potentially sell the news on the Cybertruck event and see the price come back down again. I am looking for that 257 minimum liquidity target because we failed to deliver on it here. We did take a new high here where we broke structure, but then we came down instantly. So typically what happens on a failure to deliver is we'll see a little bit of correction, maybe 1-2 days. Could go on a little further than that, but I don't anticipate. Then I think we're going to take a crack at it. So I did buy a swing position, a call, and I'm looking for that run up to 257 at least. If we look at the 1 hour time frame, we're going to skip over the 4 hour today, just trying to make the video a little bit shorter because I know it's late on my end getting the video out. But basically what happened, right? We were consolidating, chopping. We've seen this move down, this move up, and we came back down to consolidate. So this is all accumulation. If you grab your rectangle tool and you look at that, it's just a wide range accumulation, right? Positions are being accumulated. Now, typically what happens with accumulation is that you get manipulation first. Okay, and so something we do want to be mindful of is that move could be just manipulation right there. And that manipulation move could be setting up for a larger downside distribution. So we don't know if that's happening yet. We're going to be watching for it, but it certainly could. And so we're going to be paying close attention to where we come up here. If we set a lower high, we're going to look to be dumping down to this, 220s somewhere in there to see if it catches this this support level here. I think this will break pretty easily. I don't think that's going to hold very long, even if we just come up a little bit. Again, we broke. Could be a false breakout, come back down, and then could see us retrace back up here to, again, create a false breakout of this resistance, then to dump down heavy. So I want to show you guys top to bottom. Oops, that's not the right tool. I want to use a fib tool. I want to show you guys top to bottom here. That's set for standard deviation. We're going to switch that to our optimal trade entry. And I want to show you guys what I think might be happening. Obviously, we'll wait to see if this plays out. But what I think is happening is I think we're going to do one of these. I think we're going to come up here, possibly to the 240. And if we stop there, then I'm looking for a distribution that's going to take us down below this consolidation level. Okay, and where that probably would be this liquidity level here or down to this support level. Now, if that doesn't happen and we take a higher high there, that could potentially be off the table, that specific move. And then I think we'd be looking for something a little bit more like this. if we took that liquidity, okay, I think we would see something like this setup, and then I think we would potentially come back down. Maybe test some other structure or something there. But I think we would see a little bit of move, take that liquidity, and then maybe sell off from that point. Or we could just keep rallying from there. I mean, that could be enough bullish momentum to just keep us going. We would have broken some resistance lines at that point as well. But we also have this 1 hour fair value gap lurking here. And so that's kind of why I think we're going to see a pop up here. It's going to look like a smart money reversal. We're going to come back down, take out this, and then distribute down below the consolidation range. And then again, we have our trend line of support, and that's what I'd be watching for. Would take us down into discount. Also have another 1 hour fair value gap here. So it wouldn't be unusual to take this one out and test this one. So we'll just see. RSI came down pretty hard, so that's why I also think we could see a little bit of pop up back to optimal trade entry, or maybe even just to the equilibrium of this move here. But either one could happen. I'm just looking for a quick bounce. And then I'll make a decision on my swing calls as to what I want to do when we get up to that possible spot. Now, if we sell off, I'm going to hold and I'm going to average down. Now, if we look at the 15-minute chart, just gives us a little bit more idea of that structure, right? And so we got our liquidity levels that were mitigated right here. We took that higher high. We ran up into, this developed resistance trend, rejected from there, came back down, ultimately just some profit taking going on. But RSI looks pretty good on the 15-minute chart. That says we could be heading up. Let's look at that 1 hour again. Looks like we could come back to the moving average. If we looked at the daily, right, we look like we're just kind of creeping up on the daily. Where we have more room to run to the upside to some of these liquidity targets. So back to the 15-minute chart again. On the 15-minute chart, haven't seen any indication that we were in a smart money reversal yet. We haven't retraced far enough. This block did not hold as a mitigation block. We ran over it. And so what I'm looking for, price to come down, price to come back up. Let's see where that optimal trade entry would be in relation to that high. Okay, so what I'm looking for is us to come back up into this order block. We probably won't get to the full 70.5. I think we're going to probably, if we do come up, we're going to come up into this order block, one of these two order blocks here. And that's going to be right around the 62%, 61.8%, or at least somewhere between 50 and 61.8. And we're going to trade up there, and then I'm going to think we're going to sell off from there, unless we just pump over it and then head up higher again, maybe testing some of the liquidity levels I talked about earlier, like the 257. If the data comes out bullish and the Cybertruck event ends up being good, we definitely could see that run higher. So I hope this has been helpful for you guys. Sorry for the short video, but looking forward to doing another one for you, and see you guys in the trading rooms tomorrow. Thank you.